So in this video, we're gonna be breaking down a 4-hour time frame. I'm gonna be showing you all the things that I look for when I start my analysis. So we start in a 4-hour time frame, we work our way down. The 4-hour time frame paints out an entire week. It helps us identify peak formations and the weekly highs and lows. When we identify our peak formations, we trade away from the peak until the market shows us that the trend is over. Before we leave this time frame, we must be able to identify our peak formations and know the direction of the current trend. All right, so the first thing we look for is the first accumulation phase. So in a daily cycle, you have your accumulation, stop pump, extended run, and your correction. In your weekly cycle, you have the same thing. So your 4-hour time frame paints out an entire week. So you would be able to identify where you're at in the weekly cycle. All right, so the first accumulation phase is the first Asian session of the week. We take the first 2 candles of the week and we draw a line at the high and at the low. This is the dealer's psychological support and resistance levels for the week. We wait for the dealer to either break the high or the low. All right, if they break the high, we know that they're going towards the high of the week. If they break the low, we know they're going towards the low of the week. All right, now, when the dealer gets to the highs and the lows, more times than not, you'll find a peak formation. All right, so there are some weeks where they'll form a peak formation in the previous week, and then the current week, they'll trade off of the peak that was made the previous week. All right, so you won't have, it won't give you a peak formation low. So say for example, you had you had a peak down here, right? You had a peak formation low right here, and this was a new week market in right here, and this was your peak formation on your 4-hour time frame, price close, and right here, right? The beginning of this week, it paints say the first 4-hour candle is right here, and say the second 4-hour candle is right here, right? Park my drone. So we're going to draw a line at the bottom. We're going to draw a line at the top. This is our first accumulation phase. What we're looking for price to do, we're looking for price to either break the top or break the bottom, right? Now, because we have a peak formation down here, and we can see this by looking back in the past of what happened in the previous weeks, we should expect price to break the low to give us a stop hunt towards the peak and then rise for the rest of the week. All right. Now this move right here will be the low of the week, but it won't be a peak formation because the peak formation was set in the previous week. All right. They will trend up and probably to the high today. I mean, not high today, high of the week, probably until like Thursday or Friday. They had set a new peak and then they had correct. All right. So when you have your psychological support and resistance levels drawn, what you will see price do, they'll break this would be your stop hunt low, rise in your weekly cycle. Once they break the top or the high of the first accumulation phase, you'll see the dealer come back down and retest the high of the first accumulation phase or your psychological support resistance before they get out of there. All right. Sometimes when the dealer hit the high, they'll correct all the way back inside of the range made from your first accumulation phase of the week. They'll close the week right here and then start it again. So you have your accumulation, stop pump, extended run, correction. This is your weekly cycle. All right. These 2 candles right here is what we are focused on. All right. So that's a buy setup. All right. Say you got your first 2 candles right here. You draw your lines. If they break above, they might come back down to retest. Say they go towards the high of the week. You'll see an anchor. Then you'll see them drop price back down. Partner line. If they break when they break the low, you can see the dealer come back up to retest before they continue to trend down. Then you have some type of correction back into the range in the week. So you have your accumulation, your stop hunt towards the high of the week, extended run towards the low of the week, and your correction back into the range. Sometimes it goes back into the range, some weeks it don't. All right? So that's your first accumulation phase. After the dealer stop pump, they will start the extended run like we talked about in the previous slide. During this time, you'll see the dealer pull price back and retest the psychological support and resistance levels made during the first accumulation phase of the week. After the real move is over, the dealer will hit the opposite high or low of the week, then start the correction. The correction is the last step of the cycle. This is where the dealer book profits, trap traders that are just not entering the market. Okay, so just like we talked about in the previous slide, you have your first 2 4-hour candles, right? You want to draw a line at the high, or you want to draw a line at the low. Okay? When the dealer goes up, say he breaks the high, we see them pull back and retest the high of the first accumulation phase before they take off towards the high of the week. They will form the peak formation high, and they will drop price for the extended run. Okay? Draw these lines throughout the whole week. They broke the low, came back to retest and drop, then they will correct back into the range. So you have your accumulation, stop hunt high towards the high of the week, extended run towards the low of the week, and your correction. All right. When they broke the high of the first accumulation phase, they came back down to retest before they got out of there. And when they broke the low of the first accumulation phase, they pulled back to retest before they got out of there. Okay? Example. All right, so your first 2 4-hour candles, this is your 4-hour time frame. These are your first 2 4-hour candles. Now this rectangular box, the top of it is supposed to be at this top wick. All right, so you wanna go wick to wick. Okay, so in this example, you look back at what happened in the past, right? You see that, okay, based off solely this right here, because we can't see everything, we see that, all right, we had a shift candle right here. You had a sharp fin down here. The market baseline is underneath the stationary 50. So we could be in a downtrend. And if we're in a downtrend, we should be looking for sales. All right. So off of this shark fin, right, we should be not off of this shark fin and off of this shift, we could expect price to pull back to the 13 EMA and then rise. Why? Because after every shift candle, every time the 5 and the 13 EMA cross, price will not every time, but the majority of the time, it will pull back to the 13 EMA before it continue with the trend. All right, so knowing that, we kind of expect this drop right here because they just shipped the zone and they haven't pulled back yet. Right, so they break the low of the first accumulation phase, right, and then they get right back into the range. So they break it, form a morning star pattern, get right back into the range. All right. The next day, they break the high of the range. And mind you, this line, the box, supposed to be right here. Right? That's at the wick, right? So what happened was this. This candle broke the high of the first accumulation phase. And then what happened? It pulled back, wicked the top before they got out of there and went towards the high of the week. Okay? They hit the 200. When your lower time frames, you'll see an anchor pattern formed at the high. Then they drop price. 5 and the 13 shift. What happens? They pull back to the 13 EMA and then drop, right? They broke the low of the first accumulation phase right here. This candle right here broke the low. What happened? They pulled back, retested the low of the first accumulation phase, and they got out of it. Okay? So this example right here, this is a new week, right? The box supposed to be somewhere in here. All right, so off of this, you'll be able to count 3 levels. All right, you should be able to count when this happens on your 4-hour time frame. This is your level 1, right? So level 1 confirmation. You got level 1, right? Well, this is your peak, and then this drop right here will be your level 1. Stop on high, drop to level 2. This low broke this low. Stop on high, drop to level 3. This low broke this low. Okay, so now we on level 3. We should be expecting a reversal, right? Now you have a shark fin prices at oversold. The market baseline is still sitting underneath the stationary 50, so it's telling us that we're in a downtrend. However, price is going through. Price is starting to go through these EMAs, right? So once you see your 800 EMA get in place, all right, now we're looking at some type of reset. So price could go up or price could go down solely based off the EMAs. If we were counting levels, we're on level 3, we expect price to go up. All right, so next example right here, you got your first accumulation phase. They break the low of the first accumulation phase, right? After they break the low, they get out of there, they break the low, they come back in the range, right? Retest the low of the first accumulation phase again, and then they get out of there. This week, they don't give you a retest to the high of the first accumulation phase. They just trend price up, right? So on your lower time frames, these would be a bunch of straightaways. Trading away from this peak formation, trading away from this peak formation down here. All right. So in this example, you got your first accumulation phase, your first two 4-hour candles. Price breaks the low of the first accumulation phase, right? And then quickly gets back inside of the range. Right now, they consolidated inside of the first accumulation phase before they broke it. All right, they break it, they don't come back down for the retest. But this break, we know that they're going towards the high of the week. They broke the low, going towards the low of the week, hit the low of the week, pinned it, got out of there, extended run. So you have your accumulate, stop hump, extended run towards the high. Once you hit the high of the week, you have a shark fin at overbought. We can expect them to correct price back into some type of a range. All right, accumulation, stop hump, extended run, correction. The next week, right, looking back, what happened the week before, you have a shift candle, right? Last week, that probably happened on Friday. So price hasn't pulled back to the 13 EMA yet. So we expecting price to give me my pullback to the 13. All right. Now the 13 EMA is sitting above the first accumulation phase. So we can expect price to break the high of the first accumulation phase to satisfy the pullback to the 13 after the shift. And they do just that. They pull back to the 13, and then they drop, breaking the low of the first accumulation phase, right? They break the low, hit the low of the week, right? You have you have a shark fin on the TDI down here. Price shoots up, it breaks the high of the first accumulation phase again, comes back down, retests the high, and then gets up out and gets out of there. Right. So in this example over here, you have your accumulation, a very small stop hump, extended run towards the high of the week, and your correction. The next week, you have your accumulation, stop hump, high, drop. Right. So this was your first stop hump, drop towards the low of the week, extended run. Okay. Now, if we were looking at price based off what happened before, this will be a pullback to the 13 off of the shift. And we could predict that price should be breaking this low off of the continuation of this move. You understand? So next, we got our 5 and our 13 EMA cross. All right. The 5 and 13 EMA cross is a shift candle in your 4-hour time frame. When these EMAs cross, it confirms level 1 in the Diller cycle. If you go to your 1-hour time frame, you'll see the 13 EMA crossing your 50 EMA. When level 1 is confirmed, your peak formation is locked. That's the start of AFP. AFP stands for a trade away from peak or away from peak. All right, so once you see the 5 and 13 shift, you want to be able to count your levels. And if you're at level 3 and it shifts, you want to trade away from that level, all right? Because that will give you your peak formation. Now, every time the 5 and 13 shift doesn't mean you're at a peak, all right? Sometimes the market will pull back and it will shift these EMAs on a pullback. That's not going to give you a peak formation because it's a pullback. So you have to know where you at in a cycle to know if this shift is a peak formation or if it's just a pullback. All right, so if you look at these boxes, right? I boxed the shifts. So the 5 and 13 shift right here, this was the shift candle. This is what happened. Over here, it shifted again and price went up. Right here, it shifted again, price goes down. Right here, it shifts again, price goes up. Right here, it shifts again, price goes down. Right here, it shifts again, price goes up. All right. So notice on these shifts, if you look at the TDI, right, your market baseline is sitting at overbought. It shifts, price goes down. Right. Your market baseline, you have a small shark fin. Market baseline looks like it's bouncing off of the stationary 50. You get a shift, price goes up. Right. The next week you have a shark fin, blood in the water right here. You get a shift, price goes down. You have another shark fin down right here. You get a shift, price goes up. You got another shark fin down right here, right? They form an M formation. Get a shift right here, price goes down. So you could have caught this shift, right? This was a pullback. Now this was an example of something I talked about in the previous slide. Say you took this shift right here, right? Say you took this shift right here, right? You have your shark fin right here. Say you took this shift. The pullback to the 13 did what? It shifted these EMAs. All right. So when this happened, when you get the new shift candle, we're not looking for a pullback to the 13 rise because we have our shark fin right here, our overbought, right? And we're looking for price to pull back to this 13. You get what I'm saying? So if this pullback breaks this high, right, then this will give us some type of peak formation, right? Because it will have broken this peak. So if this pullback goes all the way up here and it breaks this high right here, this is no longer our peak formation going down because it was broken. We are looking for a new peak formation high. All right. Now, this was an example of a pullback to a 13 that shifted the EMAs. But then what happened right after that? It reshifted and then got out of it. Okay. Right here, you got a shark fin, blood in the water on your TDI. Then shortly after, you get a W shift. You get a shift candle right here, it pulls back, retest the peak, do not break it, another shift, and it gets out of it. All right, some more examples. You got price sitting at overbought. You don't really have a shark fin though. You get a shift, price drops. Right? Price sitting at oversold, shark fin, blood in the water. You get a shift, 5 and 13 cross, price goes up. Price sitting at overbought. You get a shark fin, you get a shift, price goes down. Price sitting at oversold, you get a shark fin, blood in the water. You get a shift, price goes up. All right. So now the 13 EMA cross, pull back to the 13 EMA. Like I said before, 80 to 90% of the time, when a 5 and 13 EMA cross, the dealer will make a pullback to the 13 EMA. This pullback to the 13 EMA will act as a stop hunt towards the peak. After the pullback is over, the trend will continue away from the peak. When this happens, the dealer is leaving level 1 and going to level 2 of the 3-level cycle. All right, so the pullback to the 13 EMA in your 4-hour time frame will act as a safety trade intraday. Why? Because this will be your first your first stop hunt towards the peak formation out of level 1. So when a 5 and 13 EMA cross on your 4-hour, that's level 1 confirmation. The pullback to the 13, it will be your stop hunt towards the peak, which will be in line with your safety trade. All right, so this is what it look like. You got your shift candle, pulls back to the 13 EMA, gets out of there. You get a shift, pulls back to the 13, drop. Get a shift, pulls back to the 13, drop. Get a shift, pulls back to the 13, rise. Okay, so on the TDI, look what's going on in the TDI. You got a shark fin blowing the water. Next, you get a shift. Price pulls back to the 13 and bounces off of the station, bounces off of the market baseline. You have a shark fin. After that, you get a shift. Price pulls back to the 13. At the same time, it bounces off of the market baseline, right? Pull back to the 13, bounced off the market baseline, okay? You get a shark fin, mini shark fin. Market baseline is sitting at oversold. You get a shift, right? And it pulls back to the 13. In this example, it doesn't bounce off the market baseline. You got a shift, pulls back to the 13, rise, okay? This shift, right? But this pullback to the 13 is taking you where? Back to this peak right down here. Look how far these EMAs are spread apart. This is clear level 3, right? We in level 3 EMAs are super fanned apart, right? It's our peak formation. This right here is taking us back down towards our peak, right? So this pullback to the 13 drop, we ignore because it's taking us back towards the peak, all right? Off of this shift, got the pullback. This right here, this pullback is around the same level as this pullback, right? And then it retested the shift and got out of there, right? So it reshift right here, pulled back, bounced off the market baseline, got out of there. Shark fin, shift, pulled back to the 13, bounced off the market baseline. All right. Now you get a shift right here, but this shift gives you a shark fin. And we know that shark fin leads to what? Peak formations. So when I get a shift candle right here telling me to sell, right? My TDI is telling me I got momentum taking me out of the bands as a stop punt low, right? So I can ignore this shift and I can wait to see what happens. It comes right back inside the range. The market baseline is sitting above the stationary 50. So we're in an uptrend looking for buys. This shift pulls back to the 13 price rise, right? Shifts right here, pulls back to the 13 on the TDI price is bouncing off your market baseline. Next, we got your previous week highs and lows. The dealer like to set traps at the highs and lows of the previous week, months, the previous days, weeks, and months. All right. The dealer will go towards the previous week highs and lows and act aggressively. They will give us momentum candles at these areas, like inducing traders to trade the breakout. Note, after a big momentum push, you can always expect a pullback. At the previous week highs and lows, we are looking for momentum candles, pins, and candlestick patterns that we talked about in the previous videos. All right. The dealer trades, or the dealer traders, dealer trades in the range 80% of the time. So if they break the highs and lows of the previous week, we can expect for them to come back inside of the range. All right. So ignore this typo. It's supposed to say the dealer trades in the range 80% of the time. If they break the high or low of the previous week, we can expect for them to come back inside of the range. All right. Now, with that being said, every time they break the high and low of the previous week, that doesn't mean they're coming back. They could be trending up on your higher time frames. So you don't want solely only want to trade off of this. Just like if they break the low of your first accumulation phase, that's not telling you they're going to give you a low of the week and give you a peak formation low. All right. Just because they shifted the 5 and 13 doesn't mean that we have a level 1 confirmation, depending on where we're at in the cycle. Just because they shifted the 5 and 13 and they pull price back doesn't mean they're going to continue with the continuation. All right. We want to be able to put all these things together, because when we do that, it will paint a clearer picture of what the dealer is really getting ready to do. All right. So this black line right here, it paints the low of the previous week. All right. Next example, they come out and they break the low of the previous week with a big momentum candle. Right. I told you after a momentum push, you can expect a pullback. Immediately after the momentum push, the market pulls back. On the TDI, market baseline is sitting out oversold. So if on the TDI, the market baseline is sitting out oversold, we're expecting the market baseline to start trending up to at least a stationary 50, right? We got divergence, prices going across on the TDI, price is clearly going down in the chart, price is going up, trending down. We got divergence right here. And what happens? It breaks the previous week's low, and then it comes right back inside of the range. Correct. All right. The next week, this black line is the previous week high. Next week, they break the previous week high, right? Give you an anchor and come right back inside of the range. All right. So the following week, you have, I didn't mark it up, but you have your high set up here, and you got your low. You got your low right here. So what happened this week is they came out, they pinned the 200 EMA, right? Then they dropped, right? Where did they go? Right towards the previous week's low. They break it with a momentum candle, right? Now the following week you have this low right here. Now what happened is the dealer came out and they retested the previous week low and gave you railroads. Came down, broke it. Next candle quickly came right back inside of the range. Then they trended up right back inside of the previous week's range. Now, from 2 weeks ago, if you was to draw this line all the way across, look at what happened. Now, this is not the straightest line, but you can see what I'm talking about, right? They broke this low quickly, got back inside the range, broke the high of this week, right? But how did they break it? With a big momentum push, right? 2 big momentum candles. It broke the high of the previous week and then the week before that. With this push, immediately after that, what happens? They come right back inside of the range. And the weekend consolidation. All right, so this line right here is this week's low. The dealer comes out, they break the low with a momentum candle, and then quickly comes right back inside of the range. TDI, you got a shark fin, blood in the water, right? You got some divergence, prices going up, prices going down in the TDI. You get a W anchor, and it comes right back inside of the range, right? Broke the low, comes right back inside of the range. You got your high of the week, got a shark fin right here. What happens? The first candle of the week breaks the high of the previous week, close right back inside of the range. Right? Closes right back inside the range. It comes right back up, retests the previous week high, and then drops. All right. Now, this week, this is this week's low. This week, the dealer comes out, they break the low with the first two 4-hour candles in your 4-hour, right? So now your first accumulation phase broke the low of the previous week. You have a shark fin. You have a shark fin, blood in the water. Your market baseline. is sitting near, what is this, near overbought. So we can expect for them to kind of bounce it back up to stationary 50. You get it breaks, comes right back into the range. Shift. Pull back to the 13 rise. Hit the high of the week, correct, right back into the range, right? Now, let me show you something, right? So notice how they broke this high, hit the high of the week in the correction, sent price right back inside the range. They retested the high, and then got out of there. Okay? All right. This right here is your previous week low. Broke the low with a momentum candle. Got shark fin blood in the water. Got another shark fin right here. It shifts and get out of there. Okay? Now, this right here is your new high, right? What happens is they break it, come back, close price inside of the range, right? Then they break it again with a momentum push, right? And they keep pushing price up towards the high of the week, right? Hit the high, pull off, right? In the weekend, correct in the weekend consolidation. The following week, what happens? Price comes out, breaks the high of the previous week. TDI, you got shark fin blood in the water, market baseline sitting out overbought. You have divergence, price is going down in the TDI, price is going up on your chart, and then it drops. All right? This is your low for that week. What happens? Price comes down, breaks the low, momentum pushes. You have you uh, you have your market baseline. It's sitting at overbought. I mean, not overbought, sitting at oversold, right? You got some divergence. What happens? Price comes right back inside of the previous week range. Breaks the low, comes right back inside of the range. All right? Hits the high of the week and then corrects. Pull back. So they hit the high, pull back, then they rose again into the week in consolidation. All right? This is this week's high. What happened? Price comes up. You have a shark fin blood in the water right here. Price comes up and it breaks the previous week high with a big momentum push. It pinned the 800 EMA, closed right underneath it. The next candle quickly got away. And then they got price right back inside of the previous week range. So you see how price likes to stay in ranges. Like I told you earlier in the earlier slides, price move inside of a range about 80% of the year. All right, so when they break the high or the low, we can expect for them to make a move back inside of the range. All right. All right. So in these examples, this is your previous week high, right? Now, like I said in the last slide, when they break the high and low of the previous week, we can expect for them to come back into the range. These are examples of when price don't come back into the range. This is the high of this week. This week breaks, it breaks the high. But notice what happened. It broke the high. This is the high right here, right? It breaks the high, come back down, retest the high, and got out of it. Right? This is the high. It broke the high. What happened? Came back down, retest the high, and got out of it. All right? This is the high of this week. It breaks the high. Well, go all the way over. This week comes back down, retested the high of the previous week, and got out of there. Then it gave you a gap. It gapped above the previous week high, right? And then spent the week making his move back inside of the range. It didn't get there this week. The following week, it broke the low, right? This is the low. It broke the low with a big momentum push, and it made his move back up, but it didn't really retest the low. It just kept dropping, right? This is the previous week's low. It came down, broke the low with a wick, then ranged up towards the high of the week, hit the high, retest the low of the week, end of the week in consolidation. All right. So when price don't come back into the range, you would notice a retest to the previous week's high low for the continuation. All right. Now this is solely off of just the 4 hour. This is not reading levels and any of that. All right. So if you're on level 3, right, and you have, say you're going up, right, and you got 3 levels of rise, and now you're on level 3. Okay. I wouldn't expect price to I wouldn't expect price to stay above the high of the previous week. I wouldn't expect them to break it, but I would expect for them to get back into the range. Why? Because I'm on level 3, and I should be expecting a reversal starting a new cycle. All right. Now, say the previous week ended on level 1 or level 2, right? Say it ended on level 1, right? And now when I go and I start counting my levels, I'm able to see that, all right, last week high was level 1, right? Now the next week, right? Looking back what happened the previous week, I wouldn't expect if they break the high of the previous week, I wouldn't expect for them to come back into the range. Why? Because last week they ended on level 1. The high was at level 1. And if we're looking for 3 levels, we can expect price to go up 2 more levels the following week. All right. So that might take all week to do. You get what I'm saying? So if they break the previous week high, they may break that high, give you level 2. Break that high, give you level 3. You get what I'm saying? Or break the previous week high, give you level 2. The next day, pull back, consolidate for a couple of days. Wednesday, break level 2 high, and Thursday, Friday, correct. You get what I'm saying? So levels are important. You know what level you on? You should have an idea if price should break the previous week highs and previous week lows. All right. What's next? The TDI in your 4-hour time frame. All right. We're looking for shark fins at the extreme levels, oversold and overbought. When you get your peak formation, it'll be confirmed with shark fins on your 4-hour time frame. You'll find divergence at peak formations. The chart show price going up, the TDI showing price going down, or vice versa. When the market baseline is below the stationary 50, you are in a downtrend. When the market baseline is above the stationary 50, you're in an uptrend. When price crossed the market baseline, pull back and bounce off of it for a continuation. All right. So when that happens, when price crosses the market baseline, the pullback will bounce off of the market baseline for the continuation. All right. So on your TDI, you got your market baseline saying that what? Oversold. You got a shark fin, blood in the water. You got divergence on your TDI. Price is going down on the chart. Price is going up on the TDI. Peak formation. You have a shift. Pull back to the 13. Price rise. All right. Price cross the market baseline right here. It comes back. The pullback bounces off of the market baseline. Then it crosses and it goes up towards crosses the stationary 50. Now we're in the buyer's sentiment of the market. All right. Over here, you got a shark fin, market baseline near overbought. What happens? Shift, price drops. Peak formation right here, peak formation right here. All right. So right here, you got your market baseline sitting now overbought. You got a shark fin, blood in the water right here. Shift, price drops. Okay. Market baseline is at oversold. You have divergence, right? You got divergence all the way to the next week. Price broke this low. Price is going up on the TDI, right? You got a shift right here. It break this low, so giving you more divergence. Then price shoots up, right? So it shifts, it pulls back. Now, mind you, it crossed the market baseline right here, right? It pulled back, bounced off, pulled back again, bounced off, right? So now this bounce is higher than price over here. However, on the chart, this price over here is lower than this price over here. Divergence. What happens after that? Price skyrockets. All right, so that's what we look for in our TDI. We're looking for divergence. We're looking for our market baseline to be out oversold or overbought, or we looking for a shark fin, blood in the water. All right. Let's see. You got a downtrend, EMA sitting on top of price. Let's see here. So on a downtrend, you see price, it crossed the stationary 50 right here, and look how it's oscillating. The market baseline is going from oversold back up to the stationary 50. Oversold back up to the stationary 50. Until what? Until they cross. All right. So like I said in the earlier TDI video, in a downtrend, the market baseline oscillates between oversold and the stationary 50, and in the uptrend, it oscillates between overbought and the stationary 50. All right. Price is moving up right here, and you can see it oscillating between overbought, stationary 50. Hit, 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 come down. Hit, 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 starting to go up. All right. So that means if you see price at the market, if you see the market baseline, say now oversold, I know for a fact that it at least has to go back up towards the stationary 50. I don't know if it may be a strong reversal going back up to overbought, but I know it has to at least go back up to the stationary 50. Same thing with price saying out overbought. If price saying out overbought, I know it at least have to go back to the stationary 50 before I do anything else, right? In this case, it hit the stationary 50 and bounced off, right? In this, where's that? In this case, it hit the stationary 50 and consolidate before crossing it and continue to go up. All right. Stationary market baseline saying now overbought. What happens? It comes down and it started trending between overbought and stationary 50 before it makes its move down. All right. Hit overbought, made his way down to the stationary 50, went right back up to overbought. We're in an uptrend, made his way back down to the stationary 50. So when we up here, we know for a fact that price has to go down to at least the stationary 50, right? It crosses the stationary 50, where price got to go. It can either cross and come back, or the next target is what? Oversold. All right. So that's how I like to read the TDI and use the TDI with my 4-hour time frame. All right. So you want to ask yourself these questions. We are looking for the peak formation high or peak formation low of the week, right? Do they set it on a Tuesday, Wednesday, or Thursday? Do you see pins and railroads? At peak formations, they would set a lot of pins at peaks. All right. The pins is trapping behavior. Railroads is also trapping behavior. Do you see the peak not being passed? So if they set a peak in the previous week, did they go back up there, retest without breaking it? Or did they break the previous week peak? Where are your EMAs? Are they on top? Are they on the bottom? Are they together? If the EMAs on top, we in a downtrend. If the EMAs on the bottom, we in an uptrend. If they're together, we in reset. We are looking for a definite reversal pattern. All right. If we don't see them, we don't trade. All right. You want to ask yourself these questions: Is it an uptrend? Is it a downtrend? Did it break the first accumulation phase? What level am I in? Did it retest the previous week high? Did it retest the previous week low? Did a 5 and 13 EMA cross? Did it pull back to the 13 EMA after the shift? Did it take out the peaks? Do you see a lot of pins and railroads? Where are the traders trapped? Where are your EMAs? Where are your no trade zones? Do you see momentum candles? The price is price respecting the channels if you created one. And the channels are talking about the trend lines. It's price creating those trend line channels that you created if you're using trend lines. All right. Now these are all the questions that I ask myself when I'm getting ready to lead a 4-hour. When I'm marking up my chart, I want to have the answer to all these questions. Right. That will help me find out the peak, and it will give me the discipline to wait for things to set up. All right. So a recap: you have your first accumulation phase. If they break the high or the low, that means they're giving you a stop hunt. This is a stop hunt. and it can take you towards the high or low of the week. At the high or low of the week, we're looking for our peak formations to be formed. All right. When the dealer breaks the high of the first accumulation phase, sometimes they'll come back and retest the high and continue up. They break the low. Sometimes they'll come back, retest the low, and continue down. All right. The 5 and 13 shift, that would give you your level 1 lock confirmation on your 1 hour time frame. So the 5 and 13 shift will be the same thing as your 50, as your 13 crossing your 50 EMA on your 1 hour time frame. All right. So if you try to count levels in your 4 hour, you just want to find where the 5 and 13 shifts. All right. The pullback to the 13 EMA doesn't always happen. All right. But when it do, you want to make sure you're in line with the peak formation. So you're not trading against the peak. All right. Some pullbacks will shift the 5 and 13 EMA. However, when that happens, we're not looking for a pullback to the 13 after that shift. Why? Because it's taking us back to the 13 EMA. What is this? Apologize about that. It's taking us back to the peak formation. All right. So watch these videos. Watch this video as many times as you need. This is how I break down my 4 hour time frame. All right. Excuse that little pop up. They trying to get me to get a new Photoshop. I ain't messing with Photoshop right now though, so I'm gonna let that rock. But part in that, I got a bunch of grammar errors in here. I got words spelled wrong, all types of stuff. But it's not about English and reading and writing and all that. It's about information of forex. All right. So pay attention to the information. Don't worry about the errors, and I'll see you in the next video.